Today's rates look good, but you're gonna wanna watch this because I'm gonna show you guys a video that you can send out to all your clients and everybody who's out there thinking of whether or not I should rent or if I should buy. This is a great calculator because this is a big thing. I just saw Grant Cardone on a podcast saying, basically, why would you own a house? You should rent your house. You should rent where you live because you owning your house is actually a liability. And his argument was that the equity is actually nothing contributing to your net worth. There's actually some validity to that, that equity is not really a tangible asset. Like you can't go to the bank and be like, hey, I have 300 grand in equity. Can I pull out of my savings? Like, no, you got to apply for a loan. You got to qualify for that. We got Dave Meltzer in trouble, actually. He owned a $100 million golf course and he needed to borrow money against it, but his credit foreclosure. That's how he lost his millions. But here's the rates that we're sitting at because I know that's what all you guys care about. So conventional sitting about low sevens. We've had some good rallies, which I'll show you right now. FHA sitting at about 6.6. We locked in a couple people at 6.8 and with dicey credit, but we locked in some great credit at 6.25. VA 6.25. You know, my margin on VA is so minimal. I just try to hook up the bets. And jumbo is sitting about 7.5. There's some exciting stuff here. And let's open a new tab here. There's some exciting stuff happening in the marketplace. So I show you guys this chart every week. Basically just tracks where mortgage rates. Green candles are good. Going up in yield means down in rate. So you can see here we hit. Wow, that's a bummer because I just did that, huh? Did that by accident. Let's refresh it. Hopefully it goes back. All right. So we hit this resistance here, and as we're teeter-tottering, you're going to hit it, and then you're going to break beneath. You can see here we had a couple days really solid. This line has really held as a strong resistance all the way through. You can see here you had 4 days of teeter-tottering, and then we crashed below. When you were above it, it actually held pretty strong. So we really haven't had any movement, but I mean, there's a lot of wiggle room that we can break through this resistance. What excites me is this stochastic crossover here. You can see here we had a stochastic crossover to the negative, and then we had a boom, we had a downslide, meaning rates are going up. Here we have a stochastic crossover towards the upside. You have a jobs reports coming out Friday, which that should entail that depending on how that comes in, the employment rate's expected to come in at 3.9, just where we were again. The Feds want unemployment rate at 5% before they really start to make any changes. We'll see if summer jobs impact anything, but here we go. And so this is what's really exciting. I actually use this house that's coming to the market soon for $650 in Temecula. It's actually a pretty nice house here that you can look at, and I'm super pumped on it. So let's look at renting versus buying this house, Temecula, $649. So here's an article from the New York Times, right? Is it better to rent or buy? And they have this financial calculator. And, you know, they skewed the article to make it seem as if renting is better than buying. And here's a good way to look at it, right? If I were to rent a house, if I were to rent that house, let's say it goes for $4,000, right? Over a year times 12, you're at $48,000. I should probably make this bigger, right? So again, we just did 4,000 times 12. Now mortgage on that house, let's just say you did a FHA loan. You're probably looking at somewhere around 5,500. So let's say 5,500, right, times 12. So you're at 66,000 is what you're going to pay in a mortgage. So if you look at it, right, you just paid an extra 18,000 for your mortgage payment, which, you know, depends on the appreciation rate of the property, whether or not it's worth it. And so what I tell people right now is if you can't afford to buy a house or afford the payments, then don't, because in a very basic example, today it is cheaper to rent a house than it is to actually own a house, right? And so they have all these different modifiers, right? And so this is similar of what they did here over a 5-year analyzation, right? And I plugged in the numbers similar to what you just saw. But if you rent a house, you're paying 288. But if you buy a house, right, over a 5-year span, it's 244,000. So you actually save money because of the appreciation and the cost of rent. So rent goes up 5% year over year. But I have this calculator here, which is pretty awesome. I held it for a 5-year span and I estimated the rent and did a 5% down payment. So now what you're looking at, right, if you rent versus if you buy this house, and we priced this out at a conventional loan of 7.5 rate, your total payments in rent with an annual rent increase of 6% is 284,000. If the payment stayed exactly the same, you'd be paying 339,000. Now, what we included in this estimate was the cost to buy the house and also what it would include to cost to sell that. So you're like, well, yeah, again, renting could technically be better because you're at a negative cash flow of 54,000. But what's not taken into account, right, is the appreciation of the home. And so the home is actually going to increase in value. And so when you take into account that your house is going to appreciate about 6% year over year, you're at about a $96,000 gain by buying a house. The next argument that they're not taking into account is rates have been at an all-time high. And so if you were to adjust for a potential refinance into the 4s, well, this is going to skyrocket on the gain probably by, gosh, I would say an extra 100 grand. But you can see here what's very interesting is it just explodes year over year because the cost of rent is compounded 6%, 6%, 6%, and 6% on the previous year, not the start year. And over time, right, after 9 years, look at this, your net gain, 339,000. Over time, you start paying more towards principal and less towards interest. So your net equity starts to grow. And that's a couple of the arguments that are missing in this whole analysis. So when I'm looking at this, and for people that are out there trying to figure out if you could buy, if you're a real estate agent and want to send this to your buyer, here's the analysis. Is it better to buy today than it is to rent? In this very simple mathematical equation, probably you should probably rent if you can't afford it. But if you can tolerate the few extra dollars per month, or $1,000, probably not a few dollars, but if you can tolerate the extra $1,000 a month, then 100% you should be buying a house because over time the house is going to continue to appreciate. And at the end of the day, here's a great way to look at it. Your Social Security, for me, for someone in their 30s, when they turn 30, when they turn 60, and here comes my daughter, guys. So, all right, guys. Well, my daughter's walking in, so that's my analysis. Peace out, y'all.